Hello everyone and welcome to video 4 of AASB S1 Sustainability Reporting Standard. Today we're going to look at the practical implication of the standard. Having covered the core content of what to disclose, we now move into the practical how of sustainability reporting under AASB S1. The general requirement provides the rules of the road to ensure disclosures are reliable, timely, and useful. These requirements ensure that sustainability disclosures are not just comprehensive, but also accessible and actionable for primary users, investors, lenders, and creditors. Let's look at the five essential requirements. First, the source of guidance. Where to find directions when preparing sustainability related financial disclosures? A structured approach ensures disclosures are rooted in recognized global best practice and comparable across industry. Let's understand the hierarchy of guidance sources. First, look at the Australian Sustainability Reporting Standard. This will be your primary source for identifying and reporting relevant risks, opportunities, and metrics. Second, consider SASB standards. This is specifically useful for disclosure topics and metrics, especially for industry specific risk. Third, you could also look at other guidance for understanding the framework, best practices when it comes to specific industries. Always rely on professional judgments. When no direct applicable standard exists, ensure disclosures remain relevant and faithfully representative. Now let's discuss about the location of disclosures. Clear and accessible placement within general purpose financial reports. Sustainability disclosures are not standalone reports, but must be integrated and easily identifiable. What are some of the requirements for placement? A. Integration. It must be a part of general purpose financial reports, including management commentary or integrated reports. B. Identifiability. Sustainability disclosures must be easily identifiable and not hidden among other information. Third, ability to cross-refer. Permitted to other published reports, if available, on same terms and fully compliant with the Australian Sustainability Reporting Standard requirements. Now, what about the timing of reporting? It's important to align with the financial statements to ensure timeliness and relevance. Sustainability disclosure must be reported simultaneously with financial statements covering the same period. The key timing rules are it should be reported at the same time as financial statements. Period changes. If reporting period changes, explain the period, reason for change, and warn about non-comparability. Material updates. Include material information received between reporting date and authorization for users. Subsequent events. Disclose significant events after reporting period that could affect user decisions. Let's look at comparative information. How do we present that? Comparative information is useful because it provides context continuity for meaningful analysis. The user needs comparative data from prior periods to understand trends and make informed decisions about resource allocation. What are some of the requirements for comparative information? A. Prior period data. Provide comparative figures for all amounts plus narrative disclosures, where this enhances understanding. B. Revise estimates. Disclose revised amounts, differences, and reason for revisions when estimates are updated with new information. Metric changes. When metrics are redefined or replaced, provide revised comparative amounts and explain the reason of changes. Adding new metrics. For newly reported metrics, provide historical comparatives wherever possible to support your analysis. Let's look at the statement of compliance. When can you say you comply? Only with full compliance across all requirements. This reinforces the integrity of sustainability reporting and assures users of completeness and reliability. So, what are the compliance rules? The user should ensure full compliance. We should meet all the requirements as stated by AASB S1. Partial compliance does not permit compliance statement. Remember, it's voluntary but binding. Since ASB S1 is voluntary, choosing to state compliance means treating the standard as fully binding for every paragraph. So, what's the takeaway for us? The journal requirement mentioned under ASB S1 provide the essential framework to ensure sustainability disclosures are comprehensive, accessible, and genuinely useful for decision makers. By adhering to these principles, organization enhance trust and transparency. These disclosures will ensure that there is enhanced trust and the stakeholders will have more confidence on the data disclosed by the organization. The disclosures must support transparency. It should be clear, easy to understand, and should provide meaningful information to the users. The disclosures should improve, boost investors' confidence. And finally, leadership position. Position yourself as a leader in involving sustainability reporting landscape. And one way to do that is to report based on ASB S1, even if it's a voluntary standard. Thank you so much for joining us today. I'm going to see you in the next video of the series. Thank you.